G'day you legends and welcome back to another video. Bitcoin has rallied upward into the weekly candle, closing the weekly candle at just under 116,000. The key point of resistance that the buyers will still need to reclaim if this trend is to reverse and continue possibly into new all-time highs. In today's video, we are diving deep into the macro and the short term, discussing what this weekly candle close means, how the price action is developing on the short term, what the total cryptocurrency and altcoin market cap are suggesting, and even taking a look at the 2-week chart in reference to a very important trend we have maintained above the entirety of this bull run. Before we get into the rest of today's analysis, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you're interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in joining our VIP community, you can check out the pinned comment for more information. Let's go ahead, guys, and jump into the video. So as we can see here, the weekly candle has literally just closed minutes ago, and we were able to close back above the weekly bull market support band, which is actually pretty significant, as if we take a look at the prior price action or the prior instances where we managed to close above the bull market support band after testing the 50 EMA on the weekly chart, instance 1 over here and instance 2 over here. From those points onwards, we were able to see strong continuations upwards. So this is definitely the first step for the buyers here to regain control of the higher time frame chart and facilitate potential continuations higher. Now, with that being said, while we sit underneath that main point of resistance at 116,000, there is still potential for pullbacks and potential for deeper corrections, but as we start pushing higher and higher, the probabilities for those begin to diminish. We'll discuss all of this in the video today. Starting on the market data, taking a look at our liquidation data and our volume data, 24-hour volume is starting to push up a bit. As we know, we're coming out of the weekend, so volume does trick up a little bit. We're at 227 billion, up 50%. Liquidations surging up 216%. 394 million. A lot of those coming from short positions, particularly over the last 4 hours, as Bitcoin saw a very aggressive 1 to 5 minute candle rally over here. You can see over here, this is just a 1 minute candle pushing the price up around 1.4%, liquidating a lot of short positions, as that was a relatively unexpected move. Now, with this move, we also saw the price break through that prior lower high at 114,000, which we discussed in our prior video. If we break here, the next target will be that 116,000 region, which we can see we are currently testing. We'll discuss all of this again in the video today. So there is a lot to take a look at as the market shows some strength moving into the new week, particularly moving into interest rates, which are coming out in just 3 days. So let's take a look at the DXY. The DXY is holding mostly steady, slowly moving upwards, holding against this macro uptrend. You can see here this macro uptrending trend line. Of course, if we break this trend line, we will expect macro corrections for the DXY. Until then, expecting some sort of sideways consolidation or possible reversal if we break through that 100 point. Looking at the S&P 500, the S&P 500 is rallying, of course. We saw some news come out with President Donald Trump and, of course, China saying that they would remove that 100% tariff. It has been an absolute back and forth roller coaster. One day he was saying we're going to have tariffs. The next day they're going to 150. The next day they're going to find a peaceful resolution. The next day tariffs are coming back. And now they've come to find the trade deal which would remove that 100% tariff. Now this of course is bullish, because anytime we see uncertainty dissipate, we generally see the market react positively, and hence why we have seen the S&P 500 continue to push up or open a little bit higher, and we have seen, of course, Bitcoin and Ethereum and the rest of the cryptocurrency market start to trickle upwards a little bit again, heavily relating to that news. Now, looking at the future of this week, we do have, of course, the interest rate data. This is coming out in around about 2 and a bit days, just under 3 days. At the moment, the probabilities are 98.3% in favor for an interest rate reduction of 25 basis points. So it is safe to assume that that reduction is priced in. It is unlikely to have any immediate impact in the price action, other than the price action rallying in anticipation of this. What we are paying very close attention to is going to be the Federal Reserve press conference 30 minutes following that interest rate decision, because this is where the Federal Reserve is going to speak on their narrative, kind of create the tone moving forward, and discuss probabilities for future interest rate reductions or pauses, etc., etc. So my anticipation is, of course, we do see an interest rate drop. I think it is very likely we see an interest rate drop according to the probabilities. If, however, we see an interest rate pause, the market will drop aggressively as it is priced in that interest rate drop. So pay attention to that, guys. If the Federal Reserve come out and say, this is the last interest rate drop we're doing for an extended period of time, the market will react negatively. If we see an interest rate pause, the market will react negatively. Other than that, the market is likely to be priced in this bullish news and will, at best, likely see a short-term rally. Let's move over to Bitcoin, guys. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. Exchange links are down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. You'll support me making this content, and you'll support yourself in your trading journey. In addition, you'll get access to our monthly campaign where you can get access to over $60,000 in rewards and an iPhone 17 Pro. So check out all that information, pin comment at the free channel, or links down below. Let's go ahead and jump into the video just after this quick break. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get right back into it. So taking a look at the total cryptocurrency market and altcoin market, and then we'll jump into Bitcoin's analysis. So first and foremost, we discussed moving into the weekly candle close, what we were looking for, particularly for the total cryptocurrency market cap. We were looking for a weekly candle close above 3.65 trillion. And by closing above 3.65 trillion, this would kind of be the line in the sand, the point of defense for the market, the deciding point for the market, where if we break below, would confirm the entire cryptocurrency market is going lower, as the total cryptocurrency market cap is a reflection of the health of the entire cryptocurrency market, so it can gauge overall market direction. Thankfully, we were able to maintain above 3.65 trillion, a very important level of support, which we've just gone ahead and described, as it was the prior weekly range high at that 2024 December top. We can see we've actually managed to bounce around this level from July onwards, so multiple months now, multiple weekly candles of support found at this 3.65 trillion level, which goes to do two things. Number one, it establishes it as a more important support. And number two, it establishes a trigger point that if we do break down, will likely result in an aggressive downward move. So what does this mean in context? As we've been saying, it means in context that while we are able to maintain above 3.65 trillion, there is hope that we do see continuations upwards into new all-time highs again, and we break the 4-year cycle 1064-day bar theory. If we break below here, it is very likely we will see Bitcoin and the rest of the cryptocurrency market trigger the points of which we need to see activate for a bear market to begin. Now, for that bear market to begin, we've discussed already, we need to see three things. We need to see, number one, the loss of the momentum, which has been the 44.9 point on the RSI, essentially the point of support through the entire bull run. We need to see the RSI breakdown. That's point number one. Point number two, we need to see the price drop below the 50 EMA. And point number three, we need to see a weekly candle close below the Gaussian channel upper band. If all three of these things occur, we enter the next macro leg down into a macro downtrend. For any of those things to occur, we will likely need to see the total cryptocurrency market cap lose 3.65 trillion first. And that is why this point is so important. As we've said already, just as those bad things happen while we break below, while we sit above, it decreases the potential for those bad things to occur, and thus decreases the probability that we actually see this move develop, and thus increases the potential for a recovery. Now, if we do see a recovery, we need to talk about what levels we need to break through to be confident, and we also need to take a look at what does that mean in terms of the broader structure of the cryptocurrency market, in terms of the 4-year cycle, in terms of how the price is developing, in terms of price targets. So let's break all of this down now, first and foremost from a weekly chart. If we're taking a look at the weekly chart, we know already, according to the 4-year cycle, the 4-year cycle top should be in. Based on the 4-year cycle is suggestive of a theory called the 1064-day bar theory. What this does is it goes to predict the average amount of days from bottoms to tops to give you an expected top date. According to the 1064-day bar theory, the top date was predicted to be the 6th of October, 2025. Now, if we take a look at the 6th of October, 2025, that was literally right here, and we saw a macro correction since. We've seen a correction of around 20% or greater since that point. So it is safe to assume, according to this, now this isn't according to what the chart's suggesting, but according to this pattern that has been playing out, this would be the anticipated top. And that will be the top provided Bitcoin does not break back above into a new all-time high. Now, the reason I say that the 4-year cycle is at risk of breaking if we see the price action maintain about 3.65 trillion is because if we look at that 1064-day bar theory and we ask the question, if we were to see a top beyond what particular date, would it be safe to assume the pattern which we have seen play out through the past 10 or so years would break? And the answer to that is, if we take a look at the standard deviation ranges, we can look at around 5.86 days. So this is the standard deviations of the prior cycles, the difference between the actual top and the anticipated top based on the 1064-day bar theory. And the 1064-day bar theory is taken from the mean amount of days, and we take that over, again, the 11 to 13, 15 to 18, 18 to 21, 23 to 25 tops. If we see at top occur 2 standard deviations greater than or after the expected top, which is the 6th of October, it would be safer to assume the top is or the 4-year cycle projected top will be invalidated, and therefore the 4-year cycle has broken. Now, the 4-year cycle will definitely break at some point. It will break at some point. And it's not meant to be predictive. It is not moving the market. We know there are macro drivers, economic policy, monetary policy, market perspective. All of these things drive buyers and decisions, and buyers and sellers, and thus drive the market price of the asset. The 4-year cycle is not predictive by nature. It is diagnostic by nature. And if this pattern maintains, it will be for the betterment of the cryptocurrency market, as it makes the macro movements more predictable by nature. Now, with that being said, there are limitations to this, and again, the 4-year cycle will likely break if we see a top happen after the 29th of October. So the 29th of October is in 2 days, so it is unlikely we'll see a new all-time high happen in 2 days. So any new all-time high that happens beyond the 29th of October has about a 70% probability of breaking the 4-year cycle, something to pay attention to. Let's take a look at the weekly charts again. Another important level we're watching on the weekly chart is the 2-week. We are watching the bull market support band on the 2-week chart. I'm going to go ahead and drop everything else off this chart for a second. You can see here the bull market support band on the 2-week chart has essentially been the line of support we've held above the entire bull market. We've tested it many times. We've actually only dropped below it on one instance, but we've recovered very quickly after that. We can see ever since the breakout around 24,000, we have sat basically above this point the entire time, even retesting it twice over the last 2 weeks. So again, provided we remain above here, there is a chance we do see major macro recoveries and we see a new all-time high breaking the 4-year cycle. If we were to drop back below these lows here at 104,000, I do want you to remember 104,000 because we'll discuss this on the short term in a second. The probability that we see extended corrections into the weekly bull market support band, into the weekly 50 EMA massively increases. And of course, if we see that happen, we likely enter a bear market again. Historically, the retest of the 50 EMA and the 44 point on the RSI here have resulted in strong continuations upwards. And therefore, if we see that break downwards, it is likely we will see that pattern not repeat. In fact, we will see the opposite, which will be corrections. Let's jump into the short-term analysis now, as that is a pretty in-depth view of the macro. Let's take a look at the short term. So on the short term, Bitcoin is, well, it's been showing a lot of strength over the last few days, but it's still showing a lot of chop, right? This is still some choppy price action. The levels we need to break above are still very clear, and the levels are being respected on the higher time frame, which is a very good sign. The level we really want to see break, and a level we've been discussing now for quite some time, is 116,000. This level is of utmost significance as it will facilitate a retest of 118. And if we take a look at 118 in the past, breaking through 118 resulting in a strong move to a new all-time high. So if we want any chance of this trend maintaining back into 120, 124, 126 new all-time highs, 116 is the level we need to clear to retest the trigger point, which will facilitate that move. So at the moment, although we've seen a nice rally upwards, it's not enough to be entirely confident that the buyers are fully back in control. It's a good sign. We have seen some fantastic signs on the macro that the weekly trends are being defended. But if we're looking at whether or not this move will move into a new all-time high, because that's really the question people are asking. Will this facilitate a move into a new all-time high? No one cares if it goes to 110, 118 or 120. People want to know, are we going up over here, right? And the answer to that is, while we sit below this 118, 116k level, the probabilities of that move are still lower than the probabilities of pullbacks back into support. So we need to pay attention to that. Let's take a look at the immediate hourly chart, even shorter time frames. Let's go down to a 30-minute chart per se. We can see here on a 24-minute chart, a 30-minute chart, we can see we have come up to retest that point of resistance absolutely perfectly over here. In terms of the price action, we are just watching to see how it develops on the short term. So we're even going down to like a 15-minute chart. We are watching to see how the price develops. In terms of momentum, we can see already some bearish divergences developing with this rally toward the upside. Watching these prior higher lows. If we do break these higher lows, watch for corrections back to the change of character into the POC at around 111,000. For these sellers to really step back in over here, we would absolutely need to see that POC lost, the break of structure lost, around 112 to 111,000 is that point of support. If we lose here, we can be confident in steeper corrections back into these lows. And of course, as we know already, lose 107,000, we likely correct to 104. And why is 104 significant? Because as we showed you on the 2-week chart, that is going to be the bull market support band. So watch all of those levels. Again, we do have rate data coming out very soon, so we could see a spanner thrown into the works. We could see some volatility. We could see some uncertainty. We could see this chop and this hard to read price action continue, which is what it is. It's kind of hard to read at the moment. So pay attention to that. Wait for the news to pass if you don't like trading these conditions. Like I personally don't trade news events. I just wait for them to pass and then I trade. And we'll pay very close attention to this. So thanks for tuning in, guys. I'll catch you all in tomorrow's video. See you then. Have a great day. Bye.